So today I'm going to talk about a stock that I completely sold out of. I completely sold out of this position yesterday, and it's a stock I've owned for a long time as well. I've owned this stock for 5 years, so it's towards where I normally hold it. I normally aim for that kind of 5 year period, and sometimes I can hold it longer than that if the fundamentals just keep up, keep doing really well. I'm going to say I did sell this stock, and I actually do believe it's still pretty good value. I'd even say this stock is probably undervalued. So I'll get on to the reason why I'm selling this stock that I think is undervalued in a second. But before we do that, yesterday, stock market, S&P 500 on the US side, obviously hitting a official correction, which is obviously the first one we've seen for a while. I think it is 2022, the last time we had an official correction. So yeah, obviously that's a big move that's going on in the US side of it. And as well as that, if you're on the Patreon, I will drop an exclusive video over the weekend where we're going to do a stock request on a stock that you guys vote for me to take a deep dive on. So if you do want to see that over the weekend, links in the description, £6 a month. But if you sign up annually, you'll get a discount if you do sign up annually. So let's go on to the stock that I have been selling. So I completely sold out this position. Obviously, with selling, I think selling is one of the hardest things to do in the stock market. Buying is pretty easy. You see a stock, you like it, you look at the value, yep, okay, you buy it. To sell it there's so many thoughts that go through your head about when you're selling. Is it the right time? Is it going to go higher from here? Is it going to go lower? Do I really want to sell this stock? It's a really tricky thing to get your head around, and especially when you completely, sell out of position. And like I said, for this one, it's actually a stock that I actually don't think is too bad value. I would actually say I'd argue the case it's actually undervalued right now. So I have to balance up the reasons why I'm selling it, and it all comes down to a risk to reward point of view. And for me, it just came to the point of view that I was just seeing more reward elsewhere. Mainly, that was the reason why. Not that I didn't like the stock. It's just that I think there's better opportunities out there in the market. I'm going to go buy those opportunities in the market. And that's kind of the reason why I did sell. I'll kind of give you a breakdown on a couple of these reasons why. So the stock that I did sell was Jet2. I did completely sell out my Jet2 position, which obviously is a quite significant move because obviously I've had the stock for 5 years in the portfolio. Originally started buying during the CV dip. The stock's massively up since that time frame. There was time periods where I was taking 100% return from this stock. I did start averaging up slightly during this period of time, but not enough. And I completely sold out for a 50% gain after all the averaging up. And obviously, previously, a lot of major profit took from Jet2. So it's another really good winner for the YouTube channel. We've got a long list of stocks that we made a lot of money on. And obviously now Jet2 has finally, even though it was on the list already for making good money on, now that I'm completely out, it goes as a complete full position exit. And right now, I first of all, let's say airline stocks. I'm not normally a big fan of them. I wouldn't really touch them. There's not really a moat. They're not really growth stories. They're very competitive. A lot of external factors can impact them. But with Jet2, a little bit different. I thought this was, if I'm ever going to buy an airline, this was going to be the one just because that they are financially one of the better ones, balance sheet wise, one of the better ones. I'd say that people maybe prefer these over some other companies just because they've got that slightly better reputation. And with that, I was able to go buy Jet2, and obviously it's done well for us. Even right now, though, I don't think it's terrible. This is only 6 times earnings. Now, companies in this kind of space, in these kind of airline spaces, don't normally trade at like a big premium value. Like normally they are 9-10 times earnings. So even then, if you say this is the best of the business, you could argue case it's probably undervalued. And, dividend yield of 1.1%. So why did I sell? Because obviously so far it's been quite positive for the stock. Couple of reasons why. So the first one was the last trading update. The last trading update sounded a bit, not great. Like if they hit the full year numbers that they said they're going to do, it'll be fine. And I think the same thing happened last year where they said if we hit the full year numbers, we'll be fine, but people are booking later. But we've had exactly the same again, where basically saying that people are continuing to leave it later and later to where they're booking. And the thing is that sometimes this can be a secret profit warning, I always feel like, because if people don't book, then what they'll do is they'll come out in 6 months' time and say, oh, we told you people were slow to book. Well, they never ended up booking, so we did tell you. So it kind of lines it up. But obviously they said it last time and they did hit the guidance, so that's something to bear in mind. But I just thought, okay, are they going to hit the numbers? And The other thing that I'm seeing a lot of weakness out there. Whenever you listen to a lot of airlines at the moment, they are all kind of saying like the bookings are getting slower. Now, what is that? Is that because we had a big boom after COVID where everybody was desperate to go on holiday? Everyone's kind of got the going out on holiday out of the system now, and maybe it'll kind of drop down a little bit. Is that because people are worried about the recessionary environment, especially like in the US and obviously as Jet2 in the UK? I think people getting a little bit worried out there at the moment. Obviously, we've seen weak GDP growth that came out this morning. Is that something that's going on? And the other thing is that if other airlines are seeing this, who's going to blink first? Is going to be someone that starts like discounting the prices. And if they start discounting the prices and eventually, like, let's say Ryanair come in, 10% cheaper than Jet2, well, is that going to be enough for people to go with Ryanair over Jet2? Maybe, more than likely. So then what point does Jet2 have to discount slightly? And then if you're getting a discounting cycle, obviously that's going to start affecting the profit margins as well. The other thing is the inflationary. They mentioned that the inflationary pressures are going up a bit at the moment. Or one thing that is going to hurt them as well is the NI changes that are coming in. Jet2 obviously have a lot of staff that work for them. Variety of numbers are coming out. Google AI is coming up with 10,000. Jet2 on there saying that during the 2024 season they had 17,000 people working for them. Whatever it is, they are going to be very exposed to these NI changes, and that's going to cause a lot of pressure on the financials. Obviously, as well, the peak season is going to be in the summertime as well, so it could become a staffing issue where they think, okay, we've got to get this many staff on board, and they get this many staff on board, and they don't have a good summer. That hurts them. Then they've also got to pay the higher NI charges on top for staff that they didn't even need at the time. I just feel like it could get quite messy for them. The other thing as well is that, revenue growth has been absolutely fine, but profit is forecast to be a little bit more limited going forward. So if you look at the moment, we are expecting the profit to go from 169 up to 184. But if we look at 2026 numbers, the profit is basically forecast at the moment to stay stagnant of probably some of the big costs that are kind of coming in right now. And as you can see, I was just looking at all these risks that are going on at the moment. With potentially weak demand at the moment, maybe it does pick up, maybe it doesn't pick up. My thing is that if they were to come out with a profit warning, looking at how some of these UK stocks have reacted with profit warnings in the last 3-4 months, I reckon if Jet2 was to get a profit warning, I think the stock would fall a lot, 10, 20%. I mean, look at someone like a JD Sports. JD Sports came out with a 3% downgrade back in November time, and since then the stock has fallen 37%. So if this was to materialize into where there is actually an issue on the booking demand, it could fall a fair bit from here. I don't know. I'm just kind of weighing up the risk to reward here. I mean, if Jet2 was to fall that much, I actually would be tempted to go back in and probably buy some more shares if they were to fall. But I was just looking at all the risks that are kind of building up here, and it just came to the point of view as well. Oh, and by the way, one thing that I also forgot is that on the page when I was doing my UK portfolio review, and when I was doing my UK portfolio review, the other thing as well is the sizing of the position. The position size is actually relatively small right now. When I started buying the stock, 5 years ago, look at that. Definitely look a lot younger there. That's what a bear market does to you guys. That 2022 bear market has aged me by about 10 years. But when I was buying that stock, 5 years ago now, and I was buying it into the portfolio, the portfolio size is a lot bigger now, and I've not really been aggressively buying. And because I've not really been aggressively buying, and you can see this, if you look at the UK portfolio review on the Patreon video, the position size has fallen quite a bit behind because I've been selling a bit of my position, and naturally because I made so much money in the stock market in the last 5 years, is that the contributions of what I'm putting into my portfolio and the profit and then the new positions I'm buying, the new position I'm buying are probably double the size. I was going to say triple, but maybe not triple, but the double the size of where I was, 5 years ago, because I've been able to make so much money and the contributions that I put in now. My position sizing from 5 years ago is double the size, triple the size right now. And then obviously taking fact that obviously I've locked in a lot of profit over Jet2 over the last few years, the position size is relatively really small right now. And it just comes to the point of view, like, I'm not really wanting to buy at the moment with Jet2. I just think there's other opportunities I'd rather put my money in right now. If I get a profit warning, that might change. But like I'm looking at Jet2 and thinking, do I go buy Jet2 or would I rather go buy JD Sports, which is even cheaper? No, we just talked about Jet2 there, which is 7 times forward earnings. Right now I can go buy JD Sports, which is 5 times forward earnings. It's 30% cheaper than Jet2, and I'd say JD Sports has probably more of a bigger, easier future to see going forward. Jet2 I would say is kind of getting towards maybe a decent capacity in the UK. It's going to be a lot harder for them to expand right now. JD Sports, I think they've still got major growth driver left in like the Middle East, the US, Canada, Europe. I see a lot easier growth for JD Sports. And that's where it just comes down to risk to reward for me. So there was all them kind of factors that kind of built in. Seeing other opportunities in the market, and I just kind of thought, you know what, it's time to walk away from Jet2. If it was to drop lower, if there was a profit warning, the profit warning threw it down 20%, I probably would be very tempted to buy it. I don't think it's a bad company. I don't think it's an overvalued stock. I'd even say it's an undervalued stock. But there was just all those kind of factors, risk to reward, what the position size was, where I just thought it was time to move away from it. So I locked in the profit and obviously moving it into other opportunities, because certainly right now I am seeing other opportunities out there in the market. There's a lot of opportunities out there that I think are buys. And if it wasn't for like all the opportunities that are out there in the market right now, I maybe still hold it. But because there is those opportunities that I'm seeing stocks like, JD Sports, for example, where it's, 30% cheaper, and I would say it's probably a slightly better company than Jet2. I've got to go buy them. And unfortunately, this is the times where you got to decide, what is the best ones to own. And unfortunately, it just comes down to a pecking order. And that's where Jet2 fell in the pecking order at the moment. So, yeah. Thanks for watching anyway, guys. Hope you enjoyed it. Like I said, I'll try to do an exclusive video on Patreon. I might do a video on Sunday. We'll see what happens. But apart from that, thanks for watching. See you in a bit.